Traders, and welcome to Price Action GPS. I am the Market Surfer here with your morning report for August 23rd, 2023. Good morning, everybody. Today I'm not going to do earnings or the market report because to me this is, I would say, a better guide to when the market's going up or down. I try to stick away from trading because I don't want to. Everyone's going to trade a little different. Everyone's going to have their own unique way of looking at the market. So I'll just go over mine real quick because I think the interest rates, the bonds and the yields explain a lot. So I'll go through Bitcoin real quick because here's our weekly chart. I'm kind of topped out. Should get some sell-off and find some support. Could it be at 23,000? I honestly think we could just roll over and go right down to 14. But dollar index is strong. I think we're going to get some weakening and then strengthening. So Bitcoin and the dollar will move inverse of each other, and bonds and yields will move inverse of each other. And I will explain it right now. So here's the dollar. That's only the hour. So if I go to a weekly, like we had for the Bitcoin, I expect dollar strength take us to about 115. Momentum's pushing to the upside. We never hit the 200 period moving average on the weekly. So we're going to go to a daily. In the daily, we hit the 600 period moving average and that right there, which takes us all the way back to April 21st of 2022. Bounced off of those lows. I'd say we probably at least get to 105, even if we're going to turn around and go to the downside, but we are at the trend line. So if I go all the way down the 4 hour, this looks like the steam's kind of rolling off. They're losing steam. It's kind of rolling over right here at that trend line. We could still get to the 103.96 just to extend that real quick and get a quick or even more oversold. But they should probably drop and hold about 101. So Bitcoin, dollar, they're inverse. If Bitcoin's, it could go up, obviously, if this dollar is going to go down. But I want you to watch how the markets are correlated. You can better, as people hate to hear, you can better time the market when you understand these things. So the euro dollar, we're still looking for a bottom here so we can gain some support and go the other way. But there's your triple top on the 4 hour, probably going down to the bottom of this trend line. But there is good support there and there that could hold. I don't care about these right now, but the move index has creeped up. We're approaching where I would start to worry at 135. Excuse me. At 135 is when the market starts paying close attention to that. And here we go with the bonds. So here's the yield, meaning the interest rate. So when we say government bonds and 10-year yield is the interest rate. See the percentages on the side here? Complete inverse of that. Well, actually, this is the 30-year, but this is the ZB. This is the 30-year. This is the bond, the futures bond. So if the bond prices go down, the interest rate goes up. So that's the bond price at, I think 116 right there is our spring to come out of this Wyckoff pattern, and then we get a bounce and we take off. I don't know how far we're going up, but I anticipate 135, maybe even up to the 600 period moving average. So these are yields. This is a weekly though, so we could still get up to there, but I'm kind of trying to see the correlation between the charts, the inversion or the divergence of the price versus yield. So the price is going down, yields go up. Once we hit the 116, I believe we get a strong buy in the bond futures, which should push the yields down. Now I'm going to show you something crazy. And this is why I'm not showing you anything else, just the charts and my take on what could possibly happen. Look at the political, climate we're in. This could be an Elliott wave beginning, 1, 2, and we're in 3. So let's go all the way back. We're talking, this chart goes back to the 80s. So we've dropped interest rate. The dollar has gotten weaker ever since. What if this is the bottom, here's the gully, we get back down to here to test, and then we just rise for the next 40 years because we could be heading into an opposite economic environment than we've had the last 50 years. Maybe we're going the other way. Maybe as we try to get jobs to come back home, and we try to manufacture in this country, and all other countries bring their companies back to their respective land, how's the government going to get everyone to pitch in? Well, if interest rates are between 5 to 10%, and there's a lot of people working, you have good jobs, you don't need banks anymore. The government will fund itself right through this. The average working person will be able to buy bonds or T-bills, you know what I mean? They'll be able to do it in a respective way where you can buy a couple $1,000s worth of this and make better interest than you could if you just put it in the bank, because I don't think banks will be around in that sense. This will be your saving mechanism. This is how they get all the Americans back into the system. They get us collectively back together economically. I don't think they'll ever get us ideologically back together, but they will start with economics. Now, in current environment, how we have inflation, we can't really stop that, and that's why they need the strong dollar, because if interest rates keep going down, the dollar's getting weaker, and we have inflation. We need the deflationary bubble, or the inflationary bubble to pop and deflation to take over before we can cut the rates down. Once they cut the rates down, that will spur the refinancing of everyone that bought houses over the last year. And with that in mind, that gives us that final push up, or what I would say, these rates the bonds go down, yields go up. So this is the yield. So when this sells off down to here, we get this spike in everyone refinancing, and then that ride up to here, and then I believe that's it. Or we continue just squeaking out to the top here, and then we have a catastrophic crash. But bottom line is, here's Friday the 13th, and we're getting down to that countdown. Now, here's what I really want to talk about. The charts will always tell you ahead of time, because right here, when this pressure started selling, where's the time frame? And that's May of 23. I expect to be earlier than that. But once there was a shortage of dollars, they had to sell their T-bond futures, which created a downward pressure on pricing and an upward pricing on yields. So the Fed doesn't have control over this like they think they do. If Japan and China need dollars, they're the largest holder of our debt anyway, other than ourselves. They have to sell these instruments to get the dollars. And when you understand how money works, I'm sure the Fed and the Treasury know if they do that, if they quantitative tighten, it dries up the pool of money, which causes people to sell their T-bond futures. Well, they're T-bonds, and the futures market is based off of that. That pushes yields up. So this is the monetary system we're in. So I just wanted to go over that, and I want to make it very clear how important understanding these charts are, because this could be our economic future of high interest rates and low growth. I know that sounds bad, but it is what it is. There's always a market to trade, and personally, I may just start trading the bonds and the yields because they're inverse of one another. So there's always something to buy rather than sell one. I mean, you could just do it kind of like currencies are. You can buy one, sell the other. It's basically what you're doing. So that is how I see the market and the charts. This is it. So even if we just go to the moving averages, once it got over the moving averages, came back, it found support here. We broke through the moving averages here. And we're at resistance here, but this is real resistance. I just think our climate, I don't know if we make it over to that 486. I mean, that's pretty much a stretch. And we get there by December, we could. I just see this catalyst right here as the start of the change. That's the bottom. We come up, we'll come back down, probably mirror this move right here to the other side. So we're talking sometime between 22 to 23. So by 24, April 24, we start bouncing out of this mess. Could be. I mean, other than those interest rates, SDS, which is inverse of the S&P, this looks like we're gaining momentum to go to the upside. And this is, I kind of started buying this here. And going back to investment versus trade, I believe this is the bottom. I'm a little negative because I think I'm in around there. And we may bounce off of that and get a little lower, but I still see a spike up to about $62 by maybe we're just from now to spring is the downward movement for the market. Amazon, what's Amazon? Amazon's another tricky one, man. We may not be going down to this. We're starting to build a nice flow and a pattern. So we could see new highs here maybe until October, or we're down. This is what I mean about the charts. There is no timing when it comes to the months, weeks. It's timing as far as the chart's concerned and price action. The Palantir is trying to hold. Palantir is going to be a good one. When the deflation hits and it drops prices, this is another one I'm going to look at to buy as an investment. And this is the 20-year. Look at that beautiful Elliott wave. It looks like a 5. But the momentum hasn't rolled over yet. It has a potential of doing that, but we're still above the moving averages. And Russell, this is the one I want to look at. This right here is an interesting one. The small cap bull 3 times. So I think once this gets down to the $26 mark, if people are interested in ETFs, and we're going to rally, then this is going to be what rallies. It seems to be anyway. All right, everybody. I know today's going to be quick. It was just the charts, but I felt it was important. So with that being said, this is a value for value endeavor. Please remember, if you're watching this on No Agenda 2, boost away. If you're watching this on Podverse or CurioCaster, boost away. Give us a thumbs up if you're watching this on YouTube or No Agenda Tube. Give us a comment, a like, a share. Let us know what we're doing right, what we're doing wrong. I just enjoyed going over the charts. Like I said, right now it is all about the interest rate and the bond price. So until our money situation changes, and Bitcoin, because Bitcoin is in that category of how our money works now. So if, like I said, if the Republicans get in 2024, or Mr. Ramik Ramaswamy, and or Trump and him, whoever, but I just think we're going to go back to drill, baby, drill, and our war will be with the cartels down in Mexico and Central America. We're going to clear everything out for the next 200-year cycle, economic cycle, where everything will go back home, manufacturing will go back to their respective countries, and we will all have inflation over resources or raw materials. We'll have to work out those bugs. But that's how I see the market, everybody. Thanks again. Stay safe and effective. And maybe I'll do something over the weekend.